My name is Nick B, and let's get into this week's futures overview. So, as always, starting with the Forex Factory calendar, Monday is going to be mute. Tuesday at 8:30 we have CPI and the 10-year bond auction. That's going to be important. Wednesday we have the 30-year bond auction. Thursday, core PPI, core retail sales. And then unemployment claims. Wow, Thursday's going to be active. And then Friday we have Empire State Manufacturing Index along with the consumer sentiment. All right, so it's going to be an active week like last week, but let's see what kind of a levels we have up on the chart, what we'll need to navigate for the week. Let me share the screen with you guys. 1 second. Okay, so as always, let's start with ES. Again, I'm not considering anything of the CPI, anything of in terms of the fundies. I just want to look at the price action. What's the price action telling me? Really nice gap up here so far. Perfect, perfect. Holy, that's big. From wow, that's fucking big. And then you know what that is actually? What is this? The contract rollover, right? For futures guys. So it's no longer H24. It's going to be M24. So micro ES is going to be MES M24 and MNQ M24 for NQ. Okay, okay, perfect. So well, let me check NQ really quick. Okay, we're not at the highs. Okay, fine. Let's get into it then. So as we know, the upside target for ES for us has been 5200. Above 5200, I mean, we're looking at we got to start considering the round number theory. So in terms of upside, if we want to see continuation. So if ES can manage to get above 5200, we can look at 50, 5220, 5240, 5260, 5280 in those 20-point increments because that's how ES likes to move intraday until we get to 5300 as now the upside target, specifically above 52. We'll see if it's worthwhile, into Monday's open to maybe catch a move like that, or maybe overnight we get that move. For now, we have a gap to fill to the downside for the most part. So let's see how that plays out. But again, on the daily, let's start identifying the floor we're in because that's going to be the next step in terms of direction for us. So right away, I want to point out this 5065 level. About 2 weeks ago, when we broke out of this level, we came up, we retested it very nicely, and had that push higher. And then a second time around, we had a little bit of a scare. I believe this was last week, right? 3, 4. Yeah, that was last week where price looked like it was about to start breaking down, right? The pullback was coming to fruition where we may have sold off and may have made our way down to 49.60, but that wasn't the case. We got bought back up, and now we are above the previous intraday session highs, which is at 51.60. I won't map the floor there yet. I'll leave that alone, but we've identified our downside support. Let's take a look at this on the 4 hour now. Okay, okay, right away, I can place my alert over here at 5065 because if we break below 5065, that's going to give us a green light to possibly catch a quick intraday short down towards 49.60. I would say the first target to the downside. 5,000 ultimately psychologically, but 49.60 would be the base because that is our previous higher low on the 4 hour. And again, if we invalidate the higher low of 49.60, more downside to come unless we're able to bounce out of these areas. We'll see. For now, I don't want to talk about too much downside. We're more so on the upside. I would have plotted a resistance level here at 51.57, but I'm going to leave that alone. I'm going to leave, I guess, the high at 51.96, and if we maybe get a break of 51.96 overnight right now, at 5200, maybe it'll be worthwhile to take a stab at going long on ES, again, targeting 5220, 5225 to the upside. Unless either or happens right now in terms of us breaking below 5065 or breaking above the highs of 5196, this is not worthy areas to do anything. And that's what I'm nervous for into the week, because if we're stuck between this range here, even with news, I mean, we're not going to see any continuation of direction. But again, that might not be the case. We'll see what Monday's Open has to bring to the table. The first half hour of Monday's Open should set the tone for at least half the day. I'll try to be on there with you guys on the GAR radio, and maybe we catch a nice move. We'll see. if I break this down now on the 1 hour, again, it's a lot of baloney. I mean, we could come down for this gap fill, but again, the floor is my issue. We're really between 5200 and 5065. So unless either or breaks, it would be no different than us timing price action. And again, I don't have the best odds when it comes down to that. So let's avoid that for now. And again, we don't really have to do nothing. We don't really have an obligation to trade this. We'll see how the moves unfold, but for now, it's going to be either or, either above 5200 and we keep it going, or below 5065 and we can consider some downside. Everything here in between, I can't even plot out a decent support resistance level here because it all gets entangled in between each other. For example, I wanted to plot something on 5157, right? But then it kind of doesn't matter because we made a lower high at 5134, then to make a higher high over at 5170. So it's all over the place. So I want to avoid that for now. So that's with ES. Again, I'd like to see this gap fill. Should we take a short on trying to fill the gap to the downside? No, you can. There's many ways to skin a cat, but I don't recommend trying to do that because you're going on a whim. Unless you're absolutely ready to risk 15 points on ES here right now, which I don't think it's worthwhile. So that's what we have with ES. Moving on to the NASDAQ. Okay, so I don't really need to bring this up on I don't need to do the weekly, but we can do the daily, and let's expand it to 2 years is fine. Okay, so focusing in on the now. Again, the 20-day EMA also a wonderful support for us. So this is going to help us identify kind of at least on the intraday if we break below 17,978. So that's basically 18,000 they're saying. So below 18,000, we may have room for spillage on the daily. But again, let's break this down. Let's identify kind of the floor we're in between. And first things first, I'm gonna mark off 18,140, 18,436 as the all-time high. That's gonna be our resistance. I want to plot a support over here at 18,144, which were previous session all-time highs. Twice when we got there. One time rejected, the second time we got there rejected, the third time was the charm where we broke out, retested it, had a wild Friday last week before getting a continuation higher. So I want to plot the support over here at 18,144, but I won't just yet. I'll leave it alone. Let's take a look at the 4 hour to see kind of what is unfolding here. No, I gotta point off. I gotta point off the previous higher lows because again, we're looking for direction here, right? So if I was to plot off this support resistance, sure, it could come in handy on the intraday, but again, we're looking for direction. We want to know the big picture. I want to know if this breaks, are we going to go higher, or if this breaks, are we going to go lower? Everything on this intraday scale here, I mean, I'm not ready to try to time this price action. I don't think it's worth it. On top of it, in the back of my mind, this is new price discovery here. How sustainable are these support resistance levels? We don't know yet. The other thing to keep in mind is the last breakout, the last platform that we were at was 17,165 when we broke out, and it's essentially propping this move up higher here. So we're still in a new area. We can't just go on a whim with these levels. So again, the floor for me below 17,830, I think it's going to give us a green light to come down towards. It's a pretty steep drop. I would say, well, on the intraday scale, 17,700 would be first. Below 17,700, I mean, honestly, we can't deny 17,500, and really, I would look at the wick of 13. I mean, excuse me, 17,360, 376 for the breakdown to the downside. But this would be the first level of continuation. So let me go ahead and place an alert over here at 17,8. We'll do 17,835. 17,835 at or below. So that breaks down. We'll know, okay, we could see that continuation high. I mean, lower, excuse me. And then when we get a break of 18,436.50, let me just adjust this a little bit better. 18,436.50. We know that we could see that continuation higher to the upside. Of course, when we get the initial break of 18,436, I would like to avoid, any possible reversals. We've been caught like that earlier, and I believe last week, but we were able to mitigate risk on the position. If the hourly candle can break above 18,436 and we can hold above it, great. That should be a good long entry. And honestly, the next target is going to be 18,500. And above 18,500, really, we're going to be approaching Carlos's target of 18,700 from what he saw on his charts. I haven't been able to see that, but again, according to round number theory, that's a very, very doable target here. So again, in terms of upside for NQ, get us above 18,436.50. We can look at more upside towards 18.5, 18.7. And then if we end up ultimately breaking below 17,830, we'll have downside to come down towards 17,460. Everything here right now, it's like a dead man zone. I just would not trust it. It would be no different than timing. Sure, we're gonna leave maybe 100, 200, maybe 300 points, on the table, but at least our probabilities are going to be higher going into our trade setups and waiting for the right opportunity to come to us. So, other than that, that is all she wrote. I mean, we can take a look at the 10-year actually really quick, just because that's going to be a big thing on Tuesday. For me, 10-year, I mean, I know that it's no longer a one-to-one correlation like before, but if the 10-year ultimately gets above 43, 46, I think we can expect to see some spillage, some more downside momentum. And then excuse me, if the 10-year decides to continue sinking below 40, maybe we come down towards 38, 30 or lower, well, the market might just see that continuation higher. So that's with 10-year really quick. I also last but not least, let's take a look at the dollar. What's that at? So the dollar's at 102.74. Very nice. Okay, so that's very nice. So we're finally out of the shaky territory of 105, where if we continue to see more upside momentum on the dollar, I think we would have seen a continuation of selling, but that's not the case. VIX is still kind of pretty mute at 1478. We'll see where it's at on Monday's open. The only thing with the VIX I would keep in mind for those who keep an eye on it is if the VIX starts reaching for 18, heading towards the $20 level, and we end up somehow breaking above it or staying above it, most likely that could be the beginning of the beginning to some fear selling to see this pullback come to fruition. But ahead of that, I mean, it looks pretty mute here. Again, the dollar at 102.74 is absolutely awesome. I know our forex guys might have caught USD Jappy shorting that pair, but other than that, I mean, that's all she wrote. That's what we're looking for in terms of direction. We're not trying to chase, no double dipping. We're sitting pretty for now, year to date. So let's see, how we unfold into overnight, and let's see what Monday's open ultimately has in store for us.